Hey guys, it's Eric here. So there's a lot of ways to invest your money, and obviously the most popular ways to invest are ETFs, stocks, crypto if you're a gambler, or real estate if you're a high roller. But recently, brokers and fintech companies are offering new ways to invest. Robo Advisors, basically using robots to manage your portfolio. Okay, Robo Advisors aren't new. In fact, they've been around since 2008, so like more than 15 years. Essentially, it's a form of investing where robots basically balance your portfolio for you. Well, we say robots, but you get it. It's basically programmed software. In the past, if you really had no idea what you're doing, you'd go to your financial advisor. They'll basically ask you about your goals and risk level. Then they'll basically manage your portfolio based on what you tell them. Robo Investors, on the other hand, use robots or software or automation to balance your portfolio for you. Essentially, before you sign up for a Robo Advisor, you'll be asked a series of questions, like what your risk levels are and what your goals are for the portfolio. Based off that, the system basically rebalances your portfolio for you every single day. It's basically an alternative option to actually hiring a portfolio manager to look after your portfolio. Cause the truth is, financial advisors and portfolio managers, they can charge a pretty high fee, like up to 2% of your total portfolio value every single year. And that's a lot. Robo Advisors, however, charge about 0.2 to 0.5%. Closer to the lower end, the more money you have with the Robo Advisor. Well, but here's the truth. I've never been a big fan of financial advisors or Robo Advisors, cause they all charge a fee. Well, of course they do. But the thing is, they're basically just rebalancing different ETFs in your portfolio based off your risk level, which, by the way, the ETFs already charge you a management fee. So they're basically charging you a fee on top of a fee. So a couple months ago, I actually tested out a Robo Advisor from Wealthsimple. I put in like $2,000 into my TFSA and basically used Wealthsimple's Robo Advisor to manage that money. And I want to see the results. And more importantly, how they manage my money. So let's look at the holdings report. Essentially, the Robo Advisor invests in a bunch of ETFs, all of which already has a management fee. On top of that, by using the Wealthsimple Robo Advisor, I'm paying Wealthsimple an extra 0.5% management fee, as you can see here. Realistically, I can balance my own portfolio every single day without having to pay Wealthsimple 0.5% every single year to balance my portfolio for me. Of course, the more you invest with Wealthsimple, the less you have to pay, as it says over here. I guess if you have $500,000 in assets invested with Wealthsimple, your fee will be like 0.2%. But still, 0.2% of $500,000 is like $1,000. That's quite a lot of money. The number one determining factor for the growth of your portfolio is the management fee, cause it compounds over time. And plus, if you look at the ETFs in my Robo Advisor account, it's not the ETFs that I would prefer to have in my portfolio. I mean, everybody's different though. But I get it. Not everybody wants to spend time every single day to rebalance their portfolio. It's actually a lot of work. So for young people that's really busy, especially Gen Z, when they have a lot of things going on in their lives and they're not looking to put a lot of effort into their portfolios, Robo investing becomes an attractive option because it's so easy. You literally put your money there and forget about it, and basically let the program do its own thing. And that's why if you look at the Robo Advisor adoption rate, Gen Z is among the highest users at 31%. Cause they don't have time to invest, they want to keep things simple. So let's talk about the Wealthsimple Robo Advisor software. So basically, if you sign up with Wealthsimple Robo Advisor, they'll ask you some very basic questions, like how long you want to invest for, what your objectives are, and most importantly, your risk level. And based off that, the system will basically determine the equities to fixed income ratio for your portfolio. So let's say you're young and looking for a super risky portfolio. Cause you're young, you're in it for the long run. Say you put your risk level at 10, cause at Wealthsimple it's a range between 1 and 10. 10 being the highest level risk, which was my portfolio risk level for the past couple months. So basically, if you look at my portfolio, it's level 10 risk, it's 90% equities and 10% fixed income. So equities being ETFs that invest in the S&P 500, emerging markets, developed markets, the Canadian market, basically ETFs that actually hold companies. Fixed incomes are like bonds, so kind of like government bonds where they give you a fixed income so your investments are more stable. Alright, you know what, let's take a look at my holdings last month. So as expected, we have equities such as emerging markets, Canadian equities index, ZEA, which is a BMO ETF for developed markets, which holds companies like Nestle or Toyota. Now for fixed income, we have bonds at $143.17 total. So if you look at my total portfolio size at, it's about $2,125, it's only about 6.7%. So even though my portfolio risk level is 10, which means 90% equities and 10% fixed income, for some reason, that's not what happened last month in my portfolio. I guess the Robo Advisor thought that this was a better idea last month for my portfolio. I mean, I'm not too sure. That being said, I don't mind, because I'm still young.
Stop it. Get some help.
Okay, kinda young. So I want my portfolio to be as risky as possible. If you're not yet 35, you still got 30 years before retirement. I mean, nobody wants to work until they're 65. But if you're young, I wouldn't even touch fixed income, because you want to maximize your potential gains. And guess what? Wealthsimple has a secret risk level that's higher than risk level 10, but they don't call it risk level 11. This type of secret risk level provides 100% equities. Now, you can't change the risk level in the app or the web browser, because it's a secret. Because again, the highest risk level you can change online is to level 10. You need to contact customer service to get that secret risk level. So for this video, I'm actually gonna do that right now. Okay, I'm 30 minutes in, and finally there's only one person ahead of me, so that's some progress right there. I mean, I don't know about you, but waiting 30 minutes in an online chat feels so much better than waiting 30 minutes on the phone. It sucks either way, but still. Oh, connected with Sylvie. Alright, let's type. Hi, Sylvie. Now we wait. I heard that there's a new secret level 11 risk level. Would that be... I can't type. Correct. And now we wait. So basically she said, great question. They do have a risk level 11, but only the portfolio manager can help me. So I'm asking if they can transfer me over. The portfolio will do that for you? What does she mean? I have no idea. Sorry. I'm a little confused. I have no idea what she's talking about. Whenever a portfolio manager will reach out to you via email and schedule a call with you. Alright, I think that's good. Somebody will reach out to me and we'll see what they say. Alright, just got the email. It's 2 days later. Let's take a look. So basically the email is saying yes, they do have this option to have 100% equities. But what they're saying is that they expect over the long term a 90-10 portfolio generates very similar returns to 100% equity portfolio, but with significantly lower fluctuations in my portfolio or your portfolio, and improved worst case outcomes. So they're basically saying that the level 10 risk of 90-10 ratio is basically a fantastic, it's a very good portfolio ratio. So they're basically asking, knowing this information, do you still want to change to 100% equities? Well, I mean, of course, that's what I'm here for. I want to show you guys what it's like. Alright, so it's a day later. I know I didn't look like I changed, but it's a day later. They sent the email saying that my risk level has changed. Alright, let's see. I'm curious. So I'm expecting them to slowly change my portfolio to 100% equities. So in the past, you'll see that the theme was at 10% risk level. Now it's just customized. Alright, let's take a look at my portfolio. I mean, it's still 91% equities and 9% fixed income. I guess they need more time, so I'll check back towards the end of the week.
Several days later.
So today is actually 4 days after my last update. And I was supposed to provide an update 2 days ago, but you know what, it's fine because I have a screen recorded anyways. So 2 days ago, it was at 97% equities and 3% fixed income. Again, this is 2 days after they changed my portfolio settings. So within 2 days, they already adjusted my portfolio quite a lot. From 91% equities to 97% equities. But again, the goal is 100% equities. So let's check out my portfolio today. Ooh, look, it changed again. It's 99% equities now and looks like 1% fixed. No, wait. That one, it's actually 0.5% cash. So it's actually 100% equities. And what I like about Wealthsimple is that it invests in everything. So I'm talking about the Canadian equities, the emerging markets equities, so the US equities, international developed market equities. And I made a video about this a couple weeks ago regarding using some of the ETFs that offer global markets in Canada, like XEQT and VEQT. They put a lot of heavy emphasis on the Canadian equities. Just for example, XEQT holds about 25% of its portfolio in the Canadian market. And I'm sorry to say this, but Canada's market cap is small, like 3% of the global market cap. So these ETFs that put 25% of their portfolio in the Canadian market, yeah, I don't think that represents the global market too well. And if you look at Wealthsimple's Robo-Advisor, only 12.5% of the portfolio is invested in Canadian equities. So half of global ETFs in Canada, like XEQT or VEQT. And I like that. I think the Robo Advisor app for Wealthsimple has a pretty good diverse spread for equities. Yeah, you know what, I did say earlier on in the video that I did not like the ETFs that they chose for me, because you know there's different ETFs that invest in different markets. So for example, they chose EEMV for emerging markets, whereas I personally would have chosen ZEM. But I do like Wealthsimple's investment strategy though. The ETFs is just my own preference. Yeah, you know what, you do have to pay up to 0.5% to Wealthsimple for management fee. That's on top of all the management fees that the ETFs already charge you. But they make it so simple. I mean, if you really don't know much about investing, I mean, this is pretty much a one-stop shop for you. For me, I like to manage my own portfolio because I think paying a Robo Investor is still a little bit too much. But then again, I get the appeal of this and I have no problems with people using this as their full-time investment strategy. So if you're interested in Wealthsimple, use my promo code down below for free $25 when you first sign up. In this pretty shitty economy, free money is always a win.
I see this as an absolute win.
And this is an affiliate link, so you'll be helping me too. So yeah, that's it for today. If you find this video helpful, please remember to like and subscribe to my channel. It helps the YouTube algorithm and push my content out to those in need. I make personal finance tips for Canadians in my long form content and financial comedy in my shorts. Thank you all, and I'll see you next time.